This is the European edition of Breaking Banks, the world's #1 FinTech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving FinTech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the FinTech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing FinTech players in the world today. Okay, let's roll.
Welcome everybody to Breaking Banks Europe, your FinTech podcast for Europe, about Europe that goes beyond Europe. Today we are recording the second episode of a special edition, News from the FinTech Front. And I'm here with a panoply of speakers and guests from all over Europe to discuss what has been going on in the last month during the pandemic crisis. Let me introduce our guest. We have Matthias Kroner. He sits in Germany right now, in Munich. We have Ginsel discussing the Benelux. Don, where are you sitting today?
I'm in Amsterdam today.
In Amsterdam, we have Francesca Aliverti, I believe in Italy. Nina Mohanty, yes. The background shows she's in the UK, in London. We have Marco Nigris calling in from Portugal. We have Lázaro Campos in Spain. And I'm broadcasting today from the Tower of Mordor in Frankfurt, in the middle of Europe. Okay, so I want to start with you with a very important news that we got a few days ago. I was reading on the Financial Times that British digital bank Monzo tries to raise a new round of cash for investors at almost 40% discount. I guess they're looking for something like 70, 80 million pounds. They were evaluated something like 2 billion. So now the valuation is fairly down to 1.20, 1.25 billions. Now, if we look at the Stocks Euro Banking Index, we know that that index was almost at 500 points in 2008 at peak. It was almost 100 points at the beginning of this year, and is currently trading, if I'm not mistaken, around 50. So also the major banks went fairly down in terms of evaluation. But we know that banks have been for a long time undervaluated significantly. Can be that the FinTech has been a bit more overvaluated. So would this story about Monzo bring us back to sanity, or is showing that we're going to face a big problem on the FinTech ecosystem? Who wants to start commenting on this? I'm looking at Matthias, the German. I think he has to go first.
Yeah, thank you, Paolo. Ciao. Now, well, I would say normality. I think there will be nothing like normal in the next 2 years, actually, no matter what normal might be. And I might disagree with your thesis that banks are undervalued. I would say they are fairly valued if you look to the problems that we will challenge. And on the asset side, in the balance sheets, there's a lot of, let me call it, homework for the future. We will speak about the SME development. We will speak about the overall market sentiment, the economic sentiment, and so on in that show. So I wouldn't be too over-optimistic anyhow. And I would say, yes, that's coming a bit to normal. Let me say valuations are coming back to Jesus, so to say, because not only in particular for the Brits, not only, and I'm looking to Nina then, not only that COVID-19 would be a topic or an issue, it will be Brexit and all that stuff that comes along with it. So that will be a perfect double whammy for the UK banks. And I am actually surprised that it only would happen now. Nina, what do you think?
I mean, I think, quite frankly, I'm not surprised by this at all. And it seemed like people were, like, this is the biggest news that they've ever heard of. I don't think it's just FinTech that's struggling right now. I think anybody raising in this environment, trying to get an up round or even a flat round is definitely going hunting for unicorns. Not surprised it was a down round. I think also there's a broader question about the availability of VC funds, and most VCs are saying that they're open for business and that they are writing checks and everything. But I was just looking at TechCrunch, and there aren't that many rounds that are actually being reported right now. And I think actually there was a letter written in the UK by some of the FinTech companies saying that they've missed out on $1 billion of funding due to coronavirus. And I think, call me a cynic, which I definitely am, but sometimes I wonder, maybe that's a good thing. And maybe this is what we all need right now, to steal from the French. The best wine grapes come from the ones that struggle. Maybe this is a good thing.
Francesca, talking wine, we go to Italy.
Yes. Let's start the battle of wine. No, I tend to agree with what has been said. And also I tend to agree with Nina when she says that this could be positive sign, actually, not to be so negative. And not surprising, of course. I mean, all investors are now behaving in a wait-and-see kind of approach, which is, I think, quite normal and quite expected. Probably, actually, for sure, the numbers are talking by themselves. There are not so many new investments. They are all trying to take care of the companies they have in their own portfolios, also because they are struggling as well. So they have to be able to inject money if needed. So I believe this is not something that should make us surprised that much. And we should also wait and see before shooting opinions.
Well, we know that some markets are more developed than others, definitely the UK. So in the case of Monzo, it seems that this is about existing investors putting money inside at different evaluation perspectives. The question would be, what about those countries where the venture capital world was a bit behind in fintech, so they were still trying to catch up? So they might need to get external investors into the game. So they might, pose a completely different challenge.
If I may, Paolo, I think that we're seeing a number of things here, and I'm not surprised that internal investors were involved in this round. I mean, we are seeing the combination of COVID-19. Investors are very cagey right now. We don't know what's coming. Everybody's just sitting and waiting to see how things will materialize. I think that's normal. Also, we are seeing, especially in the neobanks or challenger banks, and Matthias would know more than I do on this, but the WeWork effect. Today, SoftBank has reported the biggest bad news in the story of the fund, and it's all related to how we value those assets, how we value those neobanks. WeWork shook the market, where we are really going back to basics in terms of what really is valuable and is not. So we see the second leg of that effect. And third, I think there are issues to do with Monzo themselves. At what time did the coronavirus hit them in their capital requirement cycle? So we are seeing existing investors putting in money because they have to, and they cannot actually, the company cannot go to external investors at this point. So I'm not surprised because of those three effects that the valuation is less. But I'm not sure we can just say that is the impact of coronavirus on fintech. I think it is just one of the aspects, one of the issues that you can read into that. So not much, actually, because it's the first data point. We need many more data points before.
So what you can actually read is there is a need to inject capital when the market is at the bottom, because there might be other issues that need to be resolved. That is, if you like, the hidden news inside this news. Can I say that?
Well, yeah, I think Monzo wouldn't actually have a capital raise right now if they could avoid it. So they are doing it because they have to, and it comes from where their existing investors. So that's not surprising.
Yeah, so I think what's good to note here is that indeed I think there was a lot of inflated expectations around neobanks in general, where you saw the valuations just go overhyped, basically following the same trend indeed as WeWork. So I think indeed there's definitely a similar effect there, where I think we already saw the decline at the end of 2019 with regard to how fast these valuations were going up. So I think there was already some scrutiny in the market then. What I do think is good to note is that it doesn't go for all valuations, because some parts of fintech are really booming at the moment. And I think that that's where you, as an investor, would still love to get your hands on and will actually get a hard time to get on board.
So where would you put the money?
Yeah, so think about everything that pushes banks further into digitization, plus everything what has a regulatory focus at the moment. So think about KYC, AML, digital onboarding, digital online process automation. So a lot of banks were not prepared to have everyone work remote. I think there's still also very often the exception where part-time teams are still actually in the office, because otherwise just processes will stop. So there's some problems to resolve there to actually finalize digitization for these institutions.
If you look at the numbers, it's also interesting to see that a neo-brokerage kind of solution didn't really see down phase in this period.
No, the opposite, right?
Yeah,
so
exactly.
The neo-brokers they've got waiting lines now for everyone that wants to open an account. It might be good marketing, I don't know, but
I can tell you why, because, as you might know, Fido was the second bank I founded. The first bank was a discount brokerage back in the middle 90s. So actually, the biggest single source for trading is volatility. And here you go. The worst scenario for a discount broker, whatever neo, not, or kind of, I don't care, free.
You would always benefit from that.
Exactly. So what you need is kind of up and down volatility. That is the biggest source for this kind of trading. So I'm not surprised at all.
You see across the board the banks putting on the side loan provisions, but those heavily operating in investment banking like Goldman Sachs, because they got benefiting opportunities from extreme volatility. That's very true.
Absolutely. So I don't want to talk it too much. May I, Lázaro? I like your picture regarding WeWork, and I'm always a bit skeptical and critical with my colleagues in the challenger neo fintech banking environment. But I would say that is going a bit too far. May I say that and defend my chaps, so to say, and why?
Go ahead.
And why? We know that WeWork had a lot of issues. I love the story of having beer in the meetings for being productive and creative. We never had beer in the meetings, by the way. Yeah.
It's quite German approach.
Matthias, that is because kein Bier for fear. If you want to keep employees in Germany longer than 5 p.m., you give them beers. I was giving medicine to my employees in the startup.
We spoke about it the other day. Yeah, exactly. And despite the fact that Fido was located in Munich, actually, that was not the case. So, but on the other side, of course, we have to see that. So first of all, Monzo still is $1 billion, right, guys? So what are we talking? So it's still $1 billion. That's a lot of money. Even that we are living in a decade of trillions now and so on, but it's still a lot of money. First of all. Second, it's no surprise at all because we already discussed on our show how important it will be to be substantial. And substantial means sooner or later you need to have income. And that is no surprise at all. I think Corona, like in many other areas of our economy and businesses, is just used now to be the moment of truth, so to say. And that happens once in a while. That happens quite surprisingly. On the same time, we did see a round on number 26 also with the existing shareholders at a maintained valuation for whatever kind of political reasons and discussions. So what I would say is actually that those two companies are now getting beefed up in order to sustain an upcoming crisis, right? So this is actually how I read it. It's more like a defense move than an offense move, actually, I would say. However, it's a very positive message as well that the existing shareholders actually are committed no matter at what kind of evaluation. And we know that's the name of the game. If you are in a weak position, you have to accept the down round.
But just Matthias, to briefly comment on that, I think the profitable model is still far from for quite some of these companies. So it has some kind of a bubble aspect to actually look at the growth primarily instead of profitability.
Yeah, and of course, I bet that all those business plans actually do show the curve into profitability now that the COVID-19 scenario comes around. Let me say, we will see that this will be delayed, actually. We will see that the management, we can assume, actually, that the management is saying, listen, we cannot stick to the plans because COVID-19 is an unpredictable scenario. So we have to pay in for our upcoming risk, actually. We definitely will see that the strategies will be aligned, that cost cutting will happen, and so on and so forth, so that they are getting they prepare themselves for a very cold winter. That's how I read the whole scenario.
Well, that's probably a wise thing to do. I agree.
I just wanted to add that I've heard words like value or substance on the solutions, and I think it all summarizes in the customer needs. Neobanks, I think it's really cool to have an account in a neobank, but right now subscriptions, of course, we won't have that much subscriptions right now or sign-ups. And what we've seen, as Don said, that digital onboarding, KYC, AML, all what is like payments and digitalizing the banks is taking off, and it's been used this last month. So I'm not surprised they are preparing for all this, as Matthias said.
Of course, we're really navigating in the dark, as the Econ Committee said at the European Parliament level a few months ago. Now, as Lázaro mentioned, WeWork, and I see at the back of Matthias, there should be a WeWork scene in Shanghai. Now, I'm asking you, one of the mantra of FinTech was co-working space and bringing startup and maybe banks or other companies together to work in the same place. Now, we are getting into a period of social distances and problematics in terms of getting together. How do you think startups are basically coping with that and all of the accelerators and incubators? How can they still manage to keep people working and cross-pollinating while they cannot be on a constant webinar? Is this going to change?
Well, what I can see now is that people, at least in Italy, they are still in a bubble kind of phase. They don't really realize that this is probably not going to end so soon or not going to end at all. So I think that we really need to make that kind of shift in order to understand that we need to live a sort of new normality and try to build up new solutions or new ways to schedule our working life and our social way to connect with the teams. And probably we will come up with, I don't know, a sort of new connections or new ways to build up properly our products, our team, and the relationship within that. I have to say that nobody is now thinking that much about the future in these terms. I mean, they just, at least what I see, they keep going on webinars and keep going with the traditional ways of doing business, just thinking that this will end at some point, but probably it's not going to be the case.
From my perspective, I think, for better or for worse, I think we often in the startup world take our cues from the Silicon Valley. And I know that, I think it was Facebook recently announced that they are allowing their employees to work from home until the end of 2020. Whether or not people actually do come back, anyone who's ever been to Menlo Park, to their campus, it's massive. There are so many Facebook employees. Obviously, it's different when we're talking about the scale of that and a small fintech company. But I think we have been forced into this situation where now we have adapted to working from home, working remotely as best we can. But even for us at Klarna, bearing in mind that we are based in Sweden, and so Sweden has had a completely different approach to the way that they have tackled this virus, but it has been voluntary working from home for my colleagues in Stockholm. But everywhere else, for us in our all hands last week, it was announced that we're going to continue to work from home for at least another month, and then it will kind of be along with government guidance. We're all kind of watching. I think what's really interesting is what you see, the conversations about the smaller companies where they might have been renting out spaces in co-working places like WeWork or various incubators, where actually that is a really sizable piece of fixed costs that comes out every year, right? The renting of a desk of that space, you know, for some, maybe 3 million a year just to rent space. And actually, what can we do? Can we change the ways of our working now to work remotely, but instead of spending 3 million on rent, meet up more often and have offsites together? For me personally, though, I do worry because I personally believe that some of the best work, having worked for Starling, having worked for Bud, having worked for a series of fintech startups, that some of the best work or the best ideas that have come up tend to be when you're just sitting around, you know, in the canteen or whatever, or you're on your way to a meeting or something like that, and an idea comes to you. And so I mourn, to be philosophical, I mourn the loss of that.
So we may need one of those solutions of Elon Musk that connects our brains to everybody's brain, so that wherever we are, we are
a giant hive mind where we all.
Oh, Francesca, we're not going to do that. I see that you're looking at us like.
You know, I really think that actually, I mean, I completely understand what Nina says, but at the end, it's how you manage the risk. So we shouldn't be so dramatic, I think. At the end, and I don't want to undermine any kind of situation, but at the end, it's really a new risk coming up. It's not that we have to stop living our lives in the future, but we really need to just think that this is a new risk to manage, understand, and be able to approach our lives in a different way. I mean, my grandma used to say that even every time you eat fish, you have the risk to swallow a bone. And it's not something that it's pushing you away to eat fish. And I know I'm being simplistic, but still, I think we will have again the chance to be in a team, to spread ideas, taking into account the risk that something might be a bit different.
Francesca, you know that actually this risk never occurs in the UK whenever you eat fish there. There's for sure no bone in it.
That is not really
because it's not real fish.
Exactly. No, but
it's not Sicilian.
But coming back to that point of home office, when still being at Feeder, actually those days I was strongly opposing to the home office philosophy. Why? Exactly for that reason, I have to say. And I did change my mind a bit during the Corona time now. So first of all, I did work with a crypto company, supporting them on some projects last year. And I realized that this company is to 80%, and that was pre-Corona, 80% home office people globally, right? So I did see the challenges already. And now what I think in the Corona time really did change is that, you know, it's an in particular challenge for leadership team actually to manage a home office. And because you need to find out really how to steer that, how to measure that, how to control that, how to compare what you want to achieve and what you did achieve. Actually, I think that is something that was a great exercise now over the last 3 months to do so, first of all. Second, I think what changed mostly is that the environment of the person in home office understands that home office is something serious. It's not like in the old days, and I think that's the most relevant change actually. It's not like in the old days. I remember, you know, in Feeder, somebody came up to me and said, "Yeah, Matthias, can I do home office tomorrow? Because I expect a delivery." I said, "No, guy, listen, if you get a delivery and that was a piece of the kitchen, a fridge or something like that, if you get that delivery, you have no time for home office. Home office means you work at home. Home office does not mean you take your laptop home and then you do something else, you know?" So I think that this is actually something everybody now did understand. Home office is very serious. Kids are not around because kids are sitting on their laptop doing their home office with school. Now everybody understands we work at home as if we would be in school or in the university or in the office. And I think that this is the major change actually, which makes it possible. I'm more positive about it than in the past. Sorry, Don, you go ahead.
Okay, I guess that the issue would also be, Matthias, how people can cross-pollinate ideas. If you have a process which is already established and maybe it's changing, so you have a team, you move everybody to home office, it's serious, you have a way of organizing. But imagine you're starting up your startup today, day zero, and you hire 2 people you never met before, and you need somehow, you know, to continuously discuss. It's a completely different way of working, and may challenge some of the assumptions about the gig economy and how startups will have to be incubated and therefore accelerated. Nothing is impossible, but I guess that it might be different, and maybe we might learn that was not necessary at all. Who knows? Don.
Yeah, no. So I think we just have to adapt to that, because I subscribe to Matteo's conclusion as well. I've came to the same conclusion that indeed working from home is not the same as it used to be. It's not. I actually intend to do other stuff at home and tell my boss that I'll bring my laptop. And now it's actually we had to take some time to actually get used to really getting work done, and we also had to adapt a bit for it because it works a bit different than in the office, and you have to cater a bit for all the casual moments at the coffee machine or the casual talks behind someone's desk. And I think that's also what Nina was pointing at, is that there's quite a challenge that we still have to sort of rediscover how this is going to work, and also how to actually, you know, spark creativity, bring new ideas to life. But we have seen it before, because there are startups that basically have no one in the same place. They're just scattered all over the world, and they build the greatest stuff. So it is possible, but we have to rethink it as a general thing. And I just want to make one remark about Nina's link to Silicon Valley. I think one thing is really nice about this disruption is that the fact that it's basically globally at the same time, right? So we all are part of the same reset, and there's a new world to discover after this. So from an innovation perspective, we're all at the same starting line, and there's a world to gain, because indeed we have to reinvent innovation, collaboration, building trust in these new conditions as Francesca was describing.
Marco, a little your point of view before the break.
Yeah, I just wanted to add, I agree with Matthias that, work from home is work from home. And sometimes we don't have the setup that we want to have to work. So our efficiency goes down, or we, have people around, and it's not the same at the office because we don't have the same creative, surroundings. And also, I think that being more, humanistic, I think we are social people and we want to be with people. So being at home twice a week could be good, but we need to go out and meet people and talk with people. So I think we will need to adapt, but we won't for sure quit our offices.
So I got to give you my little story here. I wrote 4 books while flying around the world because I've been flying 250,000 miles a year. It's almost 30 days of continuous flying. And now that I'm at home working, I'm writing my 5th book and I get very distracted. I think it's because I don't have the Lufthansa food that I don't care much about. I got my Italian food in the kitchen. So I will try to change the way I do the grocery and see if my productivity in writing books improves. Now we have a little break and I invite all of the people in the audience to stay with us in just a few seconds. And we're back for another discussion about what is happening through the pandemic across Europe.
Do you want to be part of Breaking Banks Europe? Reach out and learn more about the opportunity to be featured in one of our shows. With over 1.6 million listeners and counting, Breaking Banks Europe is bound to become the place to advance critical dialogue in Europe and the UK FinTech scene. Reach out on Instagram or Twitter at Breaking Banks EU or go to www.provoke.fm.
Thanks for being with us after the break. This is the second episode of News from the FinTech front of Breaking Banks Europe. I remind you, this is your FinTech podcast for Europe, about Europe that goes beyond Europe. So it's for actually everybody who wants to know more about what happens on the old continent. We had a great discussion in the first half of the show, talking about evaluations of FinTech and banks. We deep dived into the problem of co-working through social distancing. And what I would like to do now is to invite our guests to discuss another important topic, the other type of money that needs to be put on the table, the government money to support FinTech, to support SMEs. We see that Europe was not very coordinated, as it always happens, in terms of supporting the startup scene. The French seems to have done something very muscular, putting down 4 billion euros in order to support their long-term investment in the startup scene. That might not have been the same case across Europe. So which are the latest news from the various countries? Marco Nigris, I will start from Portugal.
Well, in terms of government, in the last session we had with Breaking Banks, we were trying to measure the impact on the ecosystem, and we released a survey for all the startup in our network to answer. And actually, most of them weren't touched by the government measures. So we kind of joined forces with other incubators and accelerators here in Portugal, some startups too, and investors. And the government was very open to hear recommendations and suggestions from the ecosystem. And I know that they've released a special support for startups that are part of an incubator or an accelerator of the country, and that meet certain characteristics. We've been helping startups to apply to those measures, and I think the ones that are reached by that, it's a great support. For the ones that are not, we've tried to help them in another way, commercial pipeline and other stuff. But I think I've seen a change in the government measures that is for positive, for sure. Nothing is perfect, but we've seen a change in that sense.
So from Portugal to the Benelux, Don.
Yeah, sure. So I think here you saw that the most initial measures were aimed at SMEs in general. And there's quite a good regime for tax delays. So you can defer your tax payments for VAT, labor tax, and so on. So I think that's a good measure for most SMEs. There's, of course, a package that's helping the directly impacted industries like travel, restaurants, everyone who has a direct impact because they are forced closed. One category that has been a bit underserved at the beginning was startups and scale-ups, but because especially they usually, if you're in a very strong growth scenario, then you don't come up with 20% loss of revenue compared to previous year. Then you're basically already dead if you do that. So most companies would even have, let's say, a flatliner with regard to revenue, but would still be in trouble because they were operationalized for growth. So now they came up with a new scheme for startups and scale-ups, which can apply for quite an appealing convertible loan. And I think that seems to be working quite well. The initial amount made available there was, I think, 200 million, but they're planning to scale that up. FinTech companies initially were actually excluded, but that was more of probably a glitch of the pen because there's some limitations in how far financial institutions can get government support. And I think that sort of accidentally got extended towards the whole FinTech industry as well. But I believe that that's underway now. At least I'm working now with the Ministry of Economic Affairs as well to get that rule out and see that all FinTech companies are also supported by this scheme. And so from that perspective, I think that government measures look pretty good. We're very curious, of course, how now at the end of June, when most of the measures will end, what the follow-on package will be. Because I think especially there will be a lot of debate about affordability of these schemes in the long run. So if the crisis takes too long, I guess that it will be much harder to actually make use of them.
Francesca, what is your point of view from Milan?
Well, Italy is always a bit more complicated than the other countries when it comes to government issues. Of course, the government issued a new plan recently, like 2 or 3 days ago. So I think 155 billion in general were injected, are planned to be injected in the system. Also, as Don was saying, similarly to the Netherlands, there will be some renegotiation of tax payments or rent agreement and so on. But of course, there were also a lot of complaints because it's not really a matter of numbers or amount of money. When it comes to Italy, it's more a matter of speed or access to the measures, so concrete access. So we experienced already that some of the help that we're supposed to receive was not so smooth in terms of procedures to get it. And this, of course, especially when you have liquidity problems and time is quite key, this might be quite problematic.
Lázaro, what about Spain?
Yeah, thanks, Paolo. So we've already covered many of the aspects last time, so those have continued. I think Francesca is right. What we see is not only the existence of schemes, but also access to the schemes is not as it could be, and we've seen that in the press in the recent days. We have seen, since we last spoke, an increase of the support coming from Europe and the structuring of that. And also in Spain specifically, we have seen regional and city governments also implementing their own schemes to support businesses. Nothing specific for fintechs, though. They are in the general population, if you wish. A notable change that I don't know how other countries are dealing with it, but in Spain we are discussing the minimum living wage for those individuals who may not be covered by the unemployment benefits. And that's a first as far as Spain is concerned, at least, where we are trying to create a much more social cushion for those that have been affected by coronavirus in the bottom end of society. So that, I guess, is the most relevant event lately.
So what about core Europe and core non-Europe, Germany and the UK?
As you could expect, in Germany, we are discussing something totally different. We are discussing the support of the car manufacturers, because now we realize that obviously car demand has collapsed. The car manufacturers do, again, like after the financial crisis in 2009-10, actually request state support for their consumers or customers. Actually, whenever they buy a car, then they want the state actually to jump in with, I don't know, something like 5,000 to 10,000 euros per car. Then even that we have the proof, the data proof that after the state of Germany did this in the financial crisis, the year later, public demand totally collapsed on new cars because everybody did buy one as long as you get it with state support. So that is, let me say, one of the discussions we currently have. There's no new discussion, at least not to my knowledge, regarding any kind of fintech startup support or whatever. And on the other side, and I'm maybe quite happy, as tough as that is as a message, because whenever we kind of pay the bill for all this, right? So we are dropping millions and zillions into the market and we are throwing around money like crazy. I think, first of all, it's wise to do if we come to kind of model changes, right? So Lázaro, as you mentioned, the Spanish discussion regarding the minimum wage and so on, I regard to be extremely interesting because that could be a change in society and economy. So that would be not only putting money on a problem and hope for the best, but it would be a model change. We should go for model changes. This is what they discuss with support of the car manufacturers. Then it should be sustainable car manufacturing and so on and so forth. And it should be modern banking. It shouldn't be like just give money to the financial services sector and maintain the existing, and preserve the existing. It should go for model change. And this is what is currently being discussed strongly. Also having discussions that, for instance, the state is not a good shareholder. Lufthansa, at least for a certain degree, did not want to have the state as a shareholder, and so on and so forth. So it's not that easy. I would really strongly vote for that kind of model change. However, we're going to move into more or less like socialistic economy steering, and we really have to think about what is happening there, right?
So, Matthias, I'm going to change my Fiat Cinquecento with a luxurious Mercedes Maybach, okay? Understood. Nina, what about the UK?
Oh, well, what in the world is going on? I think two things that have stood out to me recently is about a month ago, the Chancellor of the Exchequer, Rishi Sunak, announced the Founders Fund. So basically, it's part of a larger package of £1.25 billion. That is basically a package to help tech startups survive during this time. And so the Future Fund, thinking about Founders Fund, the Future Fund is actually 500 million of that 1.25 billion. And that is a scheme specifically for high growth startups. And that is aimed primarily at the early stage startups. So again, it's not fintech specific necessarily, but in order to be eligible for the Future Fund loans, the startups had to have raised at least £250,000 from investors in the last 5 years. So here it definitely targets the startup or the VC funded startups of the UK where they might not have been eligible for the previous loans where that was very dependent on showing profitability. As we know, with fintech startups, with startups in general that are VC backed, it tends to be growth over profitability. So this is kind of a package to fill that gap. What I found particularly interesting for this was that the way that it will be paid back. So the loans will be converted to equity in the startup's next funding round or at the end of the loan if the debt hasn't been repaid. So I found that quite interesting. If I was being generous, I could say that maybe that could be interpreted as being the government having faith in the UK tech startups and, investing almost in their futures. And then the second rather big thing that's been making waves is the bounce back loan scheme that was announced. And this was to help small businesses get back on their feet. So actually a standout has been a startup itself, Starling Bank. So with Anne Bowden at the helm, they've done a really incredible job of the turnaround. And as Francesca said earlier, it is right now when liquidity is the biggest issue, the speed at which you're getting this money is so important for these businesses. And so if you were scrolling through Twitter the past weekend or so, you would have seen that the Starling team were working round the clock to approve these loans, getting them out to small businesses as quickly as they could. I saw some tweets that there's money that was applied for and hit bank accounts within 27 hours. So I think that is something that we should be really proud of and is a great model for us when we talk about fintech driving innovation. I've been very heartened to see people pleasantly surprised by Starling. I think Anne shared that they approved 84% of the loans. And, there's always some issues about maybe why people weren't getting approved. But I think it's a great example of how tech and how FinTech is working to address the situation right now, and something I've personally been very impressed by.
Yeah, I'm really thrilled listening. And actually, could we imagine that, I don't know how many startups then will have such a convertible, and how many state representatives or whatever kind of fund managers on behalf of the state will sit in future boards. And this is what I think will dramatically change the whole environment, wouldn't it?
I'm just picturing, though, like Boris Johnson as a board seat member.
Yeah, well, he will tell you this is all going good and so on. So, but just imagine better than no, don't let us get political. But But I find it really hard, and it's a bit of, do we believe in libertarian markets? Yes or no? We're moving clearly away from that. I think that will be a dramatic change in the whole environment. I'm not judging it now, good or bad. I'm just describing what I expect. If you have hundreds of companies now suddenly being funded with the state as an owner, so to say, that is exciting, right? This
feels a lot like China.
Yeah. I just wanted to say, as a German, I would say we ended that model actually in 1989. So, yeah, well, actually, this is very much exciting. Yeah.
Well, exciting and I would say concerning at the same time. Now, the kind of loans have two phases. The one of money that the fintech might need, the processes to give it to them, but also the other one of how the fintech can help the economy to receive the right level of funding with the right type of process that lowers all type of barriers in bureaucracy so that the process makes more sense.
Yeah.
We are living in times of high uncertainty. When the uncertainty is very high, what we can do is scenarios. So a lot of people talk about the recovery scenarios. Could be a L, a U, a V, a W, an O, whatever else. So everybody has his own idea. I would go to Dom to start with. Now, we have an economic perspective, which is very uncertain. We don't know how long this will last. We might have sort of feedbacks and recurrent pandemic problems. We definitely need to make sure that the process gets smoother on digital and the SMEs can access whatever type of funding in better ways. So what do you think about this, the relationship between these various elements? So new scenarios, technology to help SMEs to access funding?
Yeah, I think it's a really important area to talk about because it impacts basically everything that we just talked about as well. So what you see is that indeed we're looking to bring liquidity to the market, but in several cases, for example, governments weren't able to guarantee the full amounts that were being dispersed under these schemes. And what you then get is a remainder credit risk. And I just see a very strong movement now of credit providers withdrawing from the market because they are beginning to get more uncertain about the future. Right, so I think about a month ago, most people were still talking about this V-shaped recovery. Right, so we go into a big dip, and then measures will be released, and we'll be back up like nothing happened. Of course, this is not really going to happen. So you see that, but it takes some time for people to let it sink in, because we can't imagine let's say, especially a month ago, we couldn't imagine a world where we would have to keep remaining at 1.5 meters distance, where certain types of businesses are just not able to go on, and that we will actually go to a very severe economic crisis probably because of all the disruption that's going through it, where I think we were very much focused at first at the directly impacted industries. So everything that was closed down, like travel and leisure. But then we will see now that actually the uncertainty is hurting all areas of business, right? So there's a couple of exceptions of things like neo-brokers we were talking about earlier, or digitization for financial services. Some of them are doing really well, but everything that's not need to have at the moment is struggling because there's uncertainty, deals get stalled, decision-making takes much longer, and there's just less money available in the market because it's being locked up. And I think it's just interesting to see how that works, and also how FinTech could actually have a look at opening that up. Because I think it's also partly about being able to reassess how we deal with credit. Because let's say in a year from now, no balance sheet is going to look nice enough to actually provide credit on, but we will still want to do it.
Yeah, the balance sheets will be filled with blood, believe me, filled with blood. Absolutely. And Nina, as much as I like the Starling example, and say hello to Anne from me, but it's really all the loans you're going to distribute. I had a chat with the Bundesbank guy here, no names mentioned, and I said, listen, how is it doing? And he said, yeah, currently quite nice, but we will have a kind of bloodbath at year end, right? So this is what's being expected. What I only can say is we still do think we come back to normal and we move on. And this will not be the case, as you just said, Don. It will not be the case. If you look to industries like whatever, event management, or if you look to tourism and so on and so forth, the whole thing is not that we had a normal status before the COVID, then we have COVID, and then we go back to normal. This will not be it. Right? It will be a different scenario, and it will, for some industries, not look good. Lending, I would say, not look good. Right? Pricing on lending will go up. We speak about home office pricing. Prices for commercial rent will go down. I could guess so. Right? Again, that falls back to the banks then, because the banks are funding those real estate and so on and so forth. So in particular, banking looks not good out of my perspective. And because at the end of the day, this banking is the sink for all the problems at the end of the day. So this is why I would say banks are not underrated. I would say banks are fairly rated currently, right? So
let's say that the banking problem is about to start. Typically, it's a little bit delayed. We will have delinquencies on the credit cards, especially in the US. Then we see unsecured loans that might go basically to high level of defaults. Then we get the insurance companies insuring the mortgages that 30 million unemployed people in the US, but also in Europe, cannot basically pay back. We expect the NPL to go up. But in the end, this system will try to work and function. So one of the critical elements is to make sure that the little that is available is distributed in the best of the ways, making sure that those that can access it. The past will not be a prediction of the future. There's never been, definitely in this condition. So how can FinTech help banks, the credit institutions, the other FinTech that can lend, still to do that by managing their risks under a cautionary, very uncertain environment? Francesca, you were raising your hand.
Yeah, because what I was thinking is actually in all these scenario or possible scenarios, the only thing I could actually think about is collaboration. I mean, this could really be the moment where actually fintechs can help banks and banks can help fintech. Because even if you think about any fintech or any new company right now, as in any financial crisis, the main problem is the trust gap that is amplified. So I can even think that normal person might not trust so much a new player coming instead of the traditional bank. On the other side, I can think that fintech companies, not like the normal banks, they are much more agile, digital oriented, the digital onboarding, they can actually offer better services to the consumer that they might not so perfectly able to understand them in this moment. So, I mean, for me, this would really be the best moment to put in balance the positive side of one player and the positive side of the other and try to collaborate with each other. What do you think?
No, that's true. I'll tell you a little story. When I created my startup in Frankfurt in 2008, originally I wanted to do that in Milan. So we are at the beginning of the global financial crisis. I had a conversation with the CEO of my bank to create a joint venture, whatever. And then the bank merged. And he said, Paolo, integration or innovation. So we also expect there will be more integration on the banking charter, which refocuses the attention of the IT and everybody else to resolve the integration problem. So exactly when they will need to collaborate more and to innovate more, they might be filled with a lot of things to do. So we all understand that it's going to be a very complex environment. We need to find a way to facilitate the work of everybody, to access funds, to distribute, but also to collaborate so that things can happen for everybody's benefit. Marco, you had a point of view from Portugal.
Yeah, in that sense, I think we have an excellent example for that. 1 month ago, not only we did the survey, but also we tried to do a list of solutions that could help SMEs and financial institutions, like a list of fintechs, insurtechs, regtechs, everything. So we just threw this survey to our network, and we gathered more than 45 startups that could really ready-made solutions to integrate with the banks. Webinar, a presentation, preparing like bundles or packages of fintechs. For example, I don't know, credit risk, and we had 3 or 4 startups. We had payments and also like 2 or 3 startups. And then we spread this list with all the incumbents, and the response from them was amazing. We have done more than 20 matchmakings in the last month, and I think they are very eager to this collaboration that Francesca is mentioning, because I think right now you need to have a transparent customer experience. You before came from a physical, the branches of the bank, and now banks, or last months were branchless. So you needed the same customer experience, and I think fintechs there could help a lot, and we've seen that actually.
So if we can do a wrap up and ask everybody, what would you do as a fintech entrepreneur as you're seeing the light at the end of the tunnel, because the lockdown is basically being lightened up in many countries? What would you do, the first thing? We give it to Matthias.
Well, yeah, thank you so much, I guess. So this is why I opened my mic already.
You see, we are in sync.
Yeah.
So my thinking.
So first of all, I heard a very silly joke the other day that for cost-saving reasons, the light at the end of the tunnel was shut down, actually. So, and I do not want to kill any optimism on it. What I would do as a fintech entrepreneur, really, in particular in Europe now, I would really look for helping the banks, and this is why I appreciate that discussion, absolutely helping the banks in particular to focus on non-performing loans. Right? Because I would say this is the biggest single Achilles first actually we are having there in banking is how can we protect our loan assets? Why? Because economies are going down, we have increasing unemployment rates, people will not pay back. We spoke about the unsecured lending and so on. SME, the same thing, I would say. So how can we make it? Maybe e-commerce, I would exclude, Nina, because it's definitely on a better level. However, you have retail business as well. But how can we secure the loan assets? How can we use data and artificial intelligence to manage our customers we have there in the loan assets and make it even maybe a positive kind of experience for customers and the banks to manage actively your loan assets instead of sitting there waiting for write-offs according to Basel III, sell it off for 10 cents a euro and this is it, because this will be a big problem.
So Matthias, I call you into an episode about non-performing loans. Are you in?
Oh, straight away.
We organize it. Nina.
Oh gosh, I'm going to get mushy and gushy. If I were a fintech entrepreneur right now, and I were able to see my team again, I think I would be having a discussion about their experiences and how they're feeling in terms of their mental health. And that's a bit of a push because it's also Mental Health Week here in the UK. But I think we've been so focused on productivity and trying to make sure that we are rising to the challenge that we're currently in. And I think a lot of the human aspects of running a business that tend to be overlooked and fall through the cracks have kind of gone to the wayside because we're not there. We don't see the people that we work with on a day-to-day. And I know from my own colleagues that people have been struggling. I've been struggling. So I would actually be checking in with how people are feeling and making sure that as we move forward, everyone is in a good headspace to move forward together.
Good. Don, your mic is open.
Yeah, I wanted to compliment it because I think Matthias and Nina are both on a very interesting track, I think. So on the one thing I think that we could actually do is not just extend the help from real-time financial analysis towards the banks where they really need it to keep track of their portfolio and avoid the biggest losses. You could actually extend that also to the entrepreneurs or the leaders of the company. So I think most SMEs in Europe are pretty much in the blind still on how to properly manage their financial situation and liquidity. And we could extend much more help there. And I think linking that also to the point that Nina was making, I see the similar level actually on personal finance as well, where a lot of financial distress is now in the markets because people are uncertain as well. And for most people, it's still very hard to get a good grasp of their financial situation and perspective. And this is also where fintech can play an important role to take away a lot of the anxiety, I think.
NPL, mental health, personal finance, Lázaro Campos, where do you head to?
I actually think that this now it seems that we are in the dark, and this is going to be difficult, and the new normal, and not even light at the end of the tunnel as per cost-cutting measures. I actually think we are going to find ourselves in a few months in something that resembles what we had before this all happened. The jury is out in terms of what will happen, but I've been talking to different people with different perspectives. I was yesterday talking to somebody who said, by the time the summer hits us, it will have disappeared, and by December we'll have a normal Christmas. There are many schools of thought here in terms of what the new normal is going to be like. So if I was a fintech entrepreneur, I would concentrate on if what I do is valuable, I would continue working on what I do in this new scenario. I like the idea of concentrating on the obvious downfall, for example, non-performing loans. I think Matthias is onto something here. But I'm just not sure that this doom scenario is as dark as we make it sound. I think we have a capacity to bounce back as a species. And remember, this was not a structural crisis. This was a pause in our economy, which has significant events. But the amount of subsidies that have gone into this already now is bigger than what we did collectively in 2008 over 2 years. And this is months into the crisis.
Well, yes. So, we could also say the money is a helpful distraction.
No, it at least it minimizes or helps alleviate the direct impact of the crisis.
Okay, so Lázaro Campos,
more of an optimism.
Lázaro Campos lights up the light at the end of the tunnel. We stay in a country with lots of sun. Francesca from Italy.
But it might sound cheesy, but for me, if I have to think as a fintech entrepreneur, I would try to be supportive, not only with my employees, as Nina was saying, but also with my partners and with my fellow entrepreneurs. So there are a lot of companies that I think can join effort right now. They probably are too much focused on their daily job, on the crisis they are facing. But actually, they could probably build up some complementary competencies and try to work together. So I might think in this way, try to look for opportunities, join forces, and who knows, maybe something good can come up.
Marco Nigris, you also have the choice of going to surf in Portugal. What would you do?
Actually, yes. In Portugal, we have a soft lockdown, and we could go surfing. That's great news. If I was a fintech entrepreneur, I would say I wouldn't stop the panic. Focus on the core of my business. Follow my gut feeling, and take care of my team, and also reach out for help. But not the desperate help, like help me. It's just like try to collaborate with other people.
A British type of help.
Yeah. Because we sometimes try to be proud and we can do it. Let's focus, let's push. And sometimes asking for the right help could give us a lot of value and a lot of, flow on these uncertain times.
Well, if I could say, we saw many very successful startups starting with an idea and ending up monetizing in something completely different. Just Facebook is one of the stories. So we are at an inflection point, maybe also thinking differently and abandoning some of the previous assumptions might help entrepreneurs which already made an effort to build a team to create technology for a certain purpose to repurpose where there is a new need which is emerging, because when there is a need, there is an opportunity. So then I thank everybody that participated into this episode of Breaking Banks Europe. We had Don, Nina, Matthias, Lázaro, Marco, Francesca. We were directed by Renata Alves, who's always behind the scenes to do a great job. Thanks, Renata, for everything you do. And that is a wrap. Stay with us for the next episode of Breaking Banks Europe.
Thanks Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.